From R.D. Smothers Wealth Management, this is The Retirement.
When you retire, if you want an exciting life, you need a boring investment strategy.
Matters.
If you enter into retirement without a plan for income, you're not retired, you're simply unemployed.
Podcast.
Hey, this is your host, Dale Smothers, and you're listening to the Retirement Matters Podcast. My hope is that you will find the information you need in every single show on how to do one of the three things: either saving more money more efficiently, planning better for your future where you can live in retirement worry-free, or my favorite, how you can live a happy and fulfilled life in this life you have been given. We know that your time is valuable, and we appreciate you spending it listening to this episode of the Retirement Matters Podcast. On this episode of the Retirement Matters Podcast, we are coming to our radio listening audience right around the time, you may even remember, depending on where you're listening in the country, right around the time of Snowmageddon 2026. This was sent out on a live broadcast on the 24th of January. You're probably listening to this now on podcast just a few weeks later, or who knows when you're listening. I will tell you, this relationship between weather and the market is actually pretty dead on. You can't overreact to either one of them. And unfortunately, overreaction to the market is something we see far too often. So we talk a lot about discipline, and we actually have recently had this exact same messaging in a lot of our national news media over the last couple of weeks. Going into 2026, we knew on all the TV interviews that we were doing, we were saying discipline, discipline, discipline. But I had an opportunity to help Stuart Varney open the market on Tuesday. This was Tuesday, January the 20th, coming off of Martin Luther King Day. And it was right around the time that Donald Trump was seriously announcing that he wanted Greenland, and anyone who opposed was getting tariffed. You'll hear this again in the podcast. But when that occurred, the market sold off, you may remember. Now, I can't tell you what the market is doing currently because I have no idea where or when you're listening to this. But I can tell you that no matter what is taking place right now, overreacting to it, in the good or the bad, is the wrong move. Building the plan, building that plan typically in a time where it's neither really, really good nor really, really bad is the wise decision. And this is what we were telling Stuart Varney that day on Tuesday. Just remain disciplined. We play a very, very brief clip of our interview on this podcast. It's right at the end of the show, right as we're signing off. So you'll catch it if you stay to the end. But we also have that on our YouTube video. So if you're watching this on our YouTube channel, rather, and if you're watching this on YouTube, then you could probably find it right here on our lineup. However, if you are listening to this, then you might want to go to our YouTube page and check out some of the news interviews that we've done where we talk about discipline and maintaining this discipline because it's important. It's extremely important. And the only way you can really have discipline is by building a true plan that you know is going to address all of the ups and downs, the highs and lows, the twists and turns of the market. That's the only way you can really maintain a discipline. Without it, you overreact. And at RDS Wealth, we want to help you keep from overreacting, not only to bad market moves, but to good market moves, chasing returns, making these mistakes that we go through around midway through this podcast. We go through some mistakes that we've seen people make in the market, some very common mistakes, and how you can efficiently overcome them. We would love an opportunity to be a second set of eyes for you, no matter where you are in the country. We can assist. Clearly, you may be working with an advisor, and they may be very skilled in the retirement income phase, and we're not here to try and twist your arm. If you want a second approach or a second opinion, then by all means, give us a call. But if you're over the age of 59 and a half and you're working with an advisor who predominantly works with mutual funds and hardly talks to you about Social Security or taxes or what you need to be doing for Medicare or long-term care, you're probably working with a really good growth advisor. And now is the time at 59 and a half to get serious 59 and a half and older, it's time to get serious about working with an income phase advisor, because that's the phase you are approaching. And you don't put down your landing gear when you're landing a plane while you're on the runway. You put down your landing gear as you are approaching the runway. If you wait until you are landing to put down your landing gear, where you're actively in the process of touching the runway, it's too late. The same can be said about planning for retirement. When you're 5 years or less from retirement, it's time to start getting serious about understanding all the conditions and all the tools that you need to deploy to do it successfully. We'd love an opportunity to be that second set of eyes for you. 270-600-PLAN. You'll hear that many times in this podcast. Or clearly, you can jump on our website. You can find a way to get in touch with us there. Contact at RDS Wealth is a good way to shoot us an email. Or you can schedule a time to talk by clicking on Schedule a Visit. And no matter where you're at in the country, we can assist you in building the retirement plan that's efficient for you. So with that out of the way, hope that you enjoyed this podcast. And if you do, go ahead and like or subscribe, maybe send us a review, send us questions if you have them that we're not addressing, and we will be happy to assist you as we get our message out to more and more people. We hope that you can help us do just that. So without further ado, here is this week's episode of the Retirement Matters podcast. Good morning to you. I hope you're doing well and you're ready to start discussing all things retirement matters. Since we are in the middle of Snowmageddon 2026, what better way to spend some time together than to talk about all the things that matter in retirement? And we're going to do our best to bring to you over the next 30 minutes some very important updates on the market and why it's important for you to maintain discipline in your retirement plan. Just like what's going on in the weather right now, things change. And when they change in an extreme way, sometimes it calls for a little bit more preparation, a little bit of additional resources that you may not have just laying around on a regular basis. The same thing can be said in a retirement portfolio. Being prepared for the extremes is necessary, but don't overreact to the day-to-day because things change just like the weather. So we're going to get into that as we go through today's show. Before we get any farther into retirement matters, however, one of the most important things in retirement is maintaining a true purpose in retirement. Making sure that you are understanding why you're here in the first place is a big part of the first few years of life. And then putting that into motion and putting that into action is a big part of the latter years in life. You know, we go through the first 20 years trying to figure out what exactly we maybe are supposed to be doing with our life. And even into our 30s and 40s, sometimes we're challenging that thesis. We get into our career, we get into our purpose, perhaps, if it's driven by either what we do or who we are. You know, there's a big debate there. I won't go into that, but you know, since this is the pause for positivity, maybe think about that for a minute. Stop and think about, what are you on this earth to do? And there's a good chance that if you are fulfilled in what you're doing or fulfilled in knowing that you're accomplishing what you're called to do, it is in part, probably in large part, it has to do with helping others in some capacity. Because ultimately, we are all called to be a light to people from day to day. You know, some days it might be you needing a light, but to be fulfilled, you have to then be able to shine that light, return it to others. It reminds me of a small story of my son and I, Andrew. He's my oldest son. We were putting up our boat. It was a summer day. It's about 90 degrees. And just think with me for a minute, daydream, and imagine you have a 90-degree sunny day. And we were coming in. It was late in the evening. And whenever we got to the dock, we realized that we were going to need our flashlights to help put up all of the things that needed to be put up. So we began to use our flashlights to put up these, items that were on the boat. And then, of course, snapping the cover back on, we store our boat there at the lake. And around that time, Andrew dropped his flashlight. And when he did, it rolled into the water and down to the bottom it went, all the way down to the bottom. And what's unique about that flashlight is that it's supposed to be waterproof. So it went all the way down until the light just pretty much disappeared. And it was as deep as it needed to be. Well, from that point forward, anything Andrew needed to do, he had to do without a light. So what I needed to do at that point was to broaden out my light to where it was a wide beam, and then shine it up into the metal roof. And from there, it kind of cast I think of maybe like an overcast of light on the entire slip. And from there, we worked and did our task. Well, on the way leaving, Andrew said, "Thanks for shining your light, Dad." And that just hit me, and it's stuck with me. Thanks for shining your light. Sometimes we've just got to help others because maybe they've slipped, maybe they've fallen, maybe they've taken a step back, maybe they know that what they did is not correct, and it was on their own accord as to why they lost their light in the moment. But we just got to help them. It reminds me of another story. This is not as much a story as it is a fact that if you take an old lighter and you strike the lighter and it lights. But then you throw it, and I say old because I'm thinking, now they probably got push button lighters, but this is the one where you got to push the flint, and it's got to turn the flint at the same time where you're pushing the button to get gas to come out. The whatever gases are in that lighter, they got to come out, and that's what starts the spark. But if you drop that in water and then you pull it out after a period of time, that flint doesn't ignite a spark any longer because it just is too wet at the moment. But you push the button, it's got the gas. It just needs help getting the flame. And if you take another lighter and hold it up to the gas, the lighter works again. Sometimes we just got to help each other find our flames. Sometimes we've just got to help each other find what is good in this world. And that's typically by shining your light on them. And from there, they'll find their footing. Maybe you got to keep it there for a while. Maybe you need to help them for a while. And depending on who it is in your life, it could be for a long while. But perseverance and continuing to help them will pay dividends in the future. It will pay dividends. I'm going to leave this at that because I think that alone tells the story that I'm trying to get across. It makes the point of this section, which is if you really want to be fulfilled, help others. And by helping others accomplish their objectives and their mission, it will come back to help you. So that's our pause for positivity. Let's challenge one another to look for opportunities. And when we see those opportunities, take advantage of them. Shine our light, make this world a better place. And together, we will live happy. All right, let's go to a quick break. We're coming back with an update on what's going on in the market. If you've turned your news on lately, you listen to news, you watch news, social media, whatever it is, you've probably heard a lot of noise about the stock market, trade negotiations, politics, uncertainty, volatility, interest rates, you name it. It's been in the news over the last few days. We are going to discuss what's going on, why it's happened, and what you can do to weather the storm. Don't go anywhere. We're coming back with more Retirement Matters right after this.
You're listening to the Retirement Matters Show with Dale Smothers. Dale is the founder and president of R.D. Smothers Wealth Management. We specialize in building retirement plans that allow you to walk away from the worry of running out of money. If you'd like to chat with a member of our team, you can do so absolutely free by calling 270-600-PLAN. That's 270-600-PLAN. Visit us online at rdswealth.com and be sure to sign up for our free weekly newsletter.
Welcome back to the show. You may have been watching the news lately and seen a lot of talk about Greenland, a giant piece of ice that was directly in the scope of the Trump administration. Desiring this piece of ice has been something that many presidents have done in the past. I think up to 5 different presidents have desired to acquire Greenland in one way or the other, or to acquire rights at the very least. And Donald Trump, in Donald Trump fashion, threw out a tweet and a post and maybe even a statement over the weekend leading up to Martin Luther King Day, where he basically came out and said, we want Greenland, and anyone who opposes us in essentially acquiring Greenland — he was targeting one particular country, Denmark, in this statement — anyone who opposes us will see a 10% tariff on any goods that we import into America, and a 25% tariff to come later in the summer. Well, the news hit the stock market like a ton of bricks, and the market began to sell off. On Tuesday morning, when trading resumed, the news began to sell off. As a matter of fact, I was set to go on the news to help open the market with Stuart Varney on Fox Business. And as I expected, there was a question about Greenland right off the bat. And the question was something like, if Greenland, if we don't see a deal with Greenland, do you expect the market to continue to sell off? And the answer was yes. Well, the good news was that just less than 24 hours later, we saw Donald Trump stand up in front of the World Economic Forum and begin to announce why Greenland was important to him, why it was important to the United States. And just shortly after that speech, European countries were ready to sit down and discuss things, and he entered into what seems to be the form of an agreement that America will have exclusive rights to Greenland, if not altogether outright own Greenland. Those details have not come out yet. We do not know everything about that deal, and the deal's not finalized, but it's pretty close, according to Donald Trump. Now, with that, the news went through the market like wildfire in the opposite direction. The market liked that news, and we saw an immediate correction back to around where it was before the announcement, and things began to go as normal. So the reason I tell you all that story is because in just let's say 48 hours, in a matter of 48 hours from market open to the time that it was resolved, the market dropped almost 2%. And people thought, here it is. This is the major sell-off. Finally, this is what's going to be the domino, and we're going to see a significant pullback in the market. 10% is coming, perhaps 15 or 20, and how long it lasts is anyone's guess. But in just a split second, things turned around. And this type of noise in the market is what causes so many people to think there's too much risk in the market. And this noise becomes almost paralyzing to people who have money on the sidelines, people in cash, people in CDs and savings accounts, people that should be putting this money to work, especially younger people, are concerned because the market could explode in a moment's notice. That's their mindset. And I'm going to tell you, it's not that you're wrong at all. That's normal for you to believe that, because that's what the news media would have you to believe. But the stock market is made up of ownership of individual companies in America. And these individual companies do not become less valuable in a matter of hours simply because someone tweets something. These companies do not actually become less profitable because of a tweet. Now, granted, policy does impact profitability. But when we think about the overreaction of the stock market, I'm telling you, the overreaction of the stock market creates opportunity. Because just like we've come to learn in Donald Trump fashion, this tweet, this announcement was nothing more than him posturing to say this is what could happen. But in short order, he came back to a more common ground and found that it was actually beneficial for America in his negotiation tactics. Now, you do not have to agree with his politics to see the opportunity here. If only half of what Donald Trump says will happen actually happens, America will be profited a great deal from those actions. And I'm not just talking about Greenland. I'm talking about his overall agenda. If only half of the things that he hopes to happen actually happen, there will be jobs. It may not be every job, but there will be jobs to find their way back to America. There will be lower inflation. There will be higher employment. There will be lower interest rates, more affordability of homes. It may not be exactly what he says. It may not be a doubling of the stock market, but the market will be higher. This is where a lot of people who fail to take Donald Trump seriously take his rhetoric literally. And the thing is, you can't take this president literally, but you better take him seriously because he is moving the needle. And the objective is to make sure that you are moving in the same direction. And your portfolio will be benefited if you're positioned properly. You see, at RDS Wealth, our objective is not to be political. I'm confident we have team members who probably vote on both sides of the aisle. But our objective is to make sure that no matter what side of the aisle you sit on, if you vote red or you vote blue, it doesn't matter because you're an American, right? At the end of the day, you're an American. You're entitled to your opinion and to your vote. And I would stand right beside of you and die for that right, as you would for me. But when we start working together as partners, we are determined and committed to making sure that no matter who sits as our president, your retirement remains on track. Your retirement in terms of investing, your retirement in terms of taxes, in terms of income and Social Security and pension claiming, your retirement in terms of Medicare and healthcare costs and expenses that you will face, like inflation. All of these things have to be planned for. And we at RDS Wealth specialize in building a plan that is meant to weather the storms of uncertainty. Markets do not like uncertainty right now. And there is certainly no shortage of that at this present time. But with a proper plan, you can defeat volatility. You can defeat the fear and uncertainty in the market. With a proper plan, you can walk into retirement with confidence. And that's what we do here at RDS Wealth. We build a plan that is built on discipline and strategy around no matter what happens in the market, there are pieces of your portfolio that will be okay. And from those pieces, we pull your needed income until a sunny, bright, shiny day comes again. You see, the weather changes. Some days it's raining, but that doesn't mean it's going to rain forever. If it starts raining, do you throw away your swimming trunks? Well, what if it's a beach day? Do you now throw away your umbrella? You need to be prepared. We build retirement plans that help you prepare. Let's discuss in our next section what it is about these market movements that cause a lot of people to make mistakes when volatility increases. Don't go anywhere. We're coming back with Retirement Matters, and these things matter to you if you're anywhere close to retirement. We'll be back right after this.
Thank you for listening to Retirement Matters, presented by R.D. Smothers Wealth Management. If you'd like to speak with us, give us a call at 270-600-PLAN. And if you enjoy the information in this show and would like to hear more, you can access previous shows by searching for the Retirement Matters podcast on the podcast platform of your choice. We also produce a weekly newsletter. Receive it free to your email inbox by signing up online at rdswealth.com.
All right, welcome back to the show. I want to get to a clip that my marketing team has put together, a little clip with Stuart Varney and myself talking right before opening bell on Tuesday on Fox Business. But before we get there, I really want to discuss some things that we have seen as big mistakes that investors do right before retirement that are almost unerasable. They're irreversible. They're just mistakes that you do out of fear. And if you're not careful, it costs you years of retirement, or it could cost you a lifestyle in retirement that you could have otherwise enjoyed. So let's talk about those for just a minute. And I also want to preface this by saying that, people get into trouble by reacting instead of planning. And that's not altogether their fault. Unfortunately, sometimes their advisors overreact, especially an advisor who is in growth phase and you entering into income phase and have an entirely different objective. Whether it's been discussed with your advisor or not, that advisor just may not be equipped to react correctly. And instead they overreact or react incorrectly. And the reality of where we are is that political decisions certainly do move the markets. And in the short term, they may move your portfolio. But in the long term, they rarely change a well-built retirement plan. Staying the course is oftentimes the most appropriate step. And that doesn't mean you do nothing. It means that when something happens in your portfolio, you have a plan built for what the next step is. Because there is going to come a bad day in the market. It's going to happen. But having a plan for how you're going to generate the income or what takes place then in your portfolio to continue growth and to take advantage of opportunities, that's what a true retirement investment plan looks like. And I also want to preface that it's not all just about investing. When you build retirement plans, we've got classes that we teach on Medicare and on taxes and on Social Security because we're experts in those things. We're experts in helping craft a tax plan for not only you, but for your beneficiaries, your children, your grandchildren, those people that will receive this money when you are gone. How do we get it to them most tax efficiently? How do we pay less to the IRS in your lifetime? And ultimately, how do we make sure we select Social Security correctly to where we offset the cost of inflation more effectively? Or how do we make sure that we don't pay too much in Medicare expenses? How do we make sure that we pick the right Medicare choices for you? How do we make sure that long-term care doesn't steal the farm? That's all the things that go in. But one of the things that you have to make sure you get right, for sure, is the investment plan. And in that investment plan, sometimes people will confuse activity with progress, thinking that you've got to do something all the time to be doing something. And the reality is that's not the case. If you structure this properly, you can make fewer reactions and instead have planned out proactive actions. So let's talk about some examples of mistakes. We see mistakes such as holding stocks too long. This happens a lot, especially as growth phase advisors have made good money on stocks and never really valued how much that stock is worth. They'll see a stock bid higher and never sell. This can become a mistake because now you've exposed yourself to even more risk of pullbacks. Here's another one: panic selling, especially in the midst of rumors. Panic selling, like, for instance, back in April of 2025, because tariffs were on the rise. There was a day called Liberation Day when Donald Trump steps out and says on April the 3rd, taxes and tariffs are going higher, to the point where he actually put a tariff on many countries at 50, 100, and crazy numbers, 100% tariffs on these items that were coming in. The market went crazy. I mean, sold off in a flash. Had you have sold rather than bought, had you have had no other option but to sell because you needed income that month, you would have locked in those losses. Instead, at RDS Wealth, we had plans just for this. Right before the announcement of those tariffs, we went ahead and sold some things for clients, making sure we locked in the gains we had already made. And then when those tariffs were announced and they were much larger than we had anticipated, we executed the plan for sell-off. When market sell-offs take place, you need a plan. And we went in and executed that with every one of our clients, taking advantage of things that did not move at all, purchasing those stocks that moved substantially. This has allowed exponential growth on those funds coming into 2026, and now we rebalance, which is another mistake that investors make. They forget to rebalance. Now, this goes into panic selling and holding stocks too long, but as you go into your annual meeting with your advisor, you need to be thinking about what you are going to face over the next 12 months. And your advisor should be rebalancing your account, selling things that have climbed higher than anticipated, buying more of the things that have went lower than anticipated. If you like a stock at $100 a share, you should really like it at $75 a share, unless you were buying it for pure momentum, and then you're just doing it wrong altogether. So we've got to make sure we understand how we rebalance inside of a portfolio. And if you're needing help with these things, give us a call, 270-600-PLAN, or even better yet, I'm going to give you something here at the end of this segment that will cost you nothing, and it could very easily help save a lot of money for you and your family. We're going to give that to you right at the end of this segment. Again, we're talking about mistakes that we see investors make during volatile times for sure. And the next one I want to mention is chasing last year's returns inside of your investment portfolio. So looking at, say, your 401k, looking at what selection you need to make in the investments, and rather than picking them with any kind of knowledge, you just look at what did the best last year, and that's the one you choose. That can be very dangerous because you're not aware of the underlying risk that that particular fund may have, which leads me to the last mistake we want to discuss today: making changes without understanding the underlying risk or the consequences. Do not do this alone. We're here to help. Now, you may already have an advisor, and I'm going to tell you that if they're a growth advisor and you are approaching retirement income phase, you need a second opinion. You need to get a second set of eyes on your plan to make sure that it is built to withstand the retirement income phase, or you will be doing a lot of the decision-making on your own. That's not because you've got a bad advisor. It's because that advisor is not equipped to help build the plans, nor are they experts in the areas that you will be making decisions. And that is going to require you to then make them on your own or try to find someone else that can help you in a panic. RDS Wealth is here, and we are equipped, and we specialize in the retirement income phase. Those who are over the age of 59 and a half, we want to give you a second set of eyes on your plan. And to do that, we're going to block off some time on our calendar to essentially sit down with you for 15 minutes on the phone. And on that conversation, we are going to point you in the right direction of where your next step should be. We have dedicated some time on our calendars. You can get on our calendar right now by going to rdswealth.com, click on schedule a visit, and from that, we will give you our free consultation for 15 minutes. And I'm going to be honest with you, sometimes that takes 20 or 30 minutes, depending on how in depth we want to go. That 15-minute conversation, it will take you just 15 minutes. It starts the conversation. And if that conversation needs to continue, we're there with you. We want to point you in the right direction. We want to answer some questions. And I know that you have them. And if you do, we want to make sure that you get the right answers. Not from a salesperson, not from someone who's trying to twist your arm, but from someone who's going to point you in the right direction and make sure that your retirement is everything you desire it to be. Now, I've got to get real quickly to this clip that I want to play for you, and it's the message that we are putting out there for all of our national audience listeners. This is a Fox Business clip. My marketing team has put together this quick clip of what we told our listeners on Stuart Varney's show, Fox Business, this Tuesday. Take a listen.
Amazon, Apple, Google, and NVIDIA. I think you consider them all basically big tech AI stocks. You like 4 of them. Have you got a target price that Google might reach?
It could get to 400 this year, certainly. At the end of the day, discipline is what's going to matter here, especially with headlines. When fear drives the sell-off of market, it's time to be disciplined. And disciplined long-term investors get paid in these market conditions. So watching things like Google or Apple or Microsoft even, these things that are going to get sold off in this type of fear headline, taking advantage of those dips, buying those dips and riding them higher especially on the back of AI, is the play for RDS Wealth.
All right, there you have it. The same message holds true now as it did Tuesday, as it will for the entirety of 2026. Remain disciplined, and your retirement can stay on track. We would love an opportunity to help you do just that. 270-600-PLAN if you need our assistance at all. Until we talk again, whether it's right here on the same station or in person in one of our offices, always remember, save money, plan well, and live happy in retirement. God bless.
Investing involves a risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. R.D. Smothers Wealth Management is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by R.D. Smothers Wealth Management.